What is going on? Welcome back to the Cryptolabs YouTube channel. My name is Colin Mason. Today I'm going to be walking you through my business plan for Bitcoin accumulation. Now this was a strategy and a system that I actually developed on the back of a napkin in the back of a room when we had our live in-person event for the first time in Kelowna, British Columbia, Canada. Beautiful country, and we got 80 of the UIG investors that came and visited us up there, where we had just a great 3-day event. And like I said, I got a lot of inspiration during those conversations and collaborations up there that I actually developed this strategy fully focused on Bitcoin accumulation. But what I wanted to show you, this board is not something that I just created. This is based on a system that we have here in the UIG. And if you have not yet joined us in the UIG, highly recommend it. This is a great community for collaboration, for education, and to strategize in crypto and DeFi to set yourself up with all the strategies and resources and education that you would need to be able to master those skill sets and then put it into action by creating a business and portfolio. Now, what I want to show you here in the UIG really quick is under the education section in DeFi quests, you'll notice that at the end of every quest, we have this lesson called Your Business Plan. And this is where I bring members through using this as a template, but creating a system based on the vision that the member has, based on the goals that they have, based on the risk profile and portfolio allocation that makes sense for them. We develop this system using the Miro board. And so this is exactly what I did. Actually, I want to show you the napkin that I was writing on in the back of the room, where I was thinking about what's my big mission, right? And I actually have a nice framework that I'm also presenting in the UIG here real soon, is that, and I call it the why, what, how, now, well, next blueprint. It's a terrible name, and I don't know what else to call it, but this is the blueprint that I use to create these systems. And for me, I was sitting in the back of the room thinking about what is my big mission and vision. Well, for this specifically was to accumulate as much Bitcoin as humanly possible over the next several years and decades. Then I'm also thinking about, what are the immediate outcomes that I would want to hit over the next 30 to 90 days? What's a very specific target or outcome that I can develop that can indicate to me that I'm on my way to actually achieve that big mission? Then the strategy, which I'm going to get here into a second. The strategy is that main approach. What strategies are we using? Are we using lending and borrowing to maintain exposure of the underlying asset? Are we going directly into liquidity pools because we're focused on cash flow? The main strategy is what I've developed here on the Miro board. Like I said, we'll get back to that in a minute. Then we have the action steps. Okay, now that I have the strategy, I know the game plan, I know what I'm trying to achieve, what do I need to do? What action steps do I need to actually put into work right now to help me get there? Then in the well, number 5 here is the evaluation. Okay, now I've taken all the action, I know the goals, I have it all mapped out, I've taken the action. Is it working? Well, is it working, right? I need to evaluate. I need to put together a systematic way to check in on my progress. And I'll talk about that here in a minute. And then the last one, 6, and then it rotates all the way back to the top, is course correction. So this is where after we evaluate, are we actually marching towards that target? Are we actually achieving the big mission that we have set out? Most of the time, this is going to be yes, because if we take a lot of time and develop the main strategy, then usually the execution leads to the results that you're looking for, but sometimes it's not. And so this is an opportunity for us to adjust course and change direction based on what we're seeing in terms of the actual results in the evaluation section. So again, this was a framework that I put together to describe this system here. And so instead of using this napkin, I'm actually going to use my Miro board because I put it out and it's a lot easier to read. So I'm going to zoom in just a hair for us all to be able to see this. Now, like I said, in the UIG, we have these here where we're mapping out what is the main mission, what are the goals and outcomes that we're trying to achieve, and that's in this main box right here. And so for me, in this Bitcoin accumulation business plan, it is to create a treasury of Bitcoin that also can be used to generate cash flow for potential lifestyle chips, which I'll talk about here in a minute. But this is what dare I say, evergreen system that will help me accumulate more Bitcoin. Now, some people will say, Colin, but Bitcoin is going to fluctuate in price. It's 109,000 today. It could be 120,000 2 weeks from now, and then it could also be 70,000, a couple months from now. And so the price of this asset's fluctuating greatly. And I would say, yes, I agree with you. Crypto is volatile. These underlying assets and tokens and coins that we're investing in, they are volatile. However, when I think about my thesis for Bitcoin, and we don't have enough time to go through all of that today, but my thesis is I believe that the price of Bitcoin is going to be worth more in the future. The value of Bitcoin is going to be worth more in the future than it is today. And when I zoom out months and years and decades into the future, I believe that Bitcoin is going to be a heck of a lot more valuable in the future than it is today. That's my thesis. And so based on that thesis, I want to accumulate as much Bitcoin as humanly possible. And so I can do that in two ways. I can just dollar cost average into Bitcoin, meaning I can take my income, I can take my earned dollars, and I can just buy Bitcoin and store it in a cold storage wallet. And that's not a bad strategy. In fact, when I was talking with a lot of people at the event specifically, that's a part of their strategy is, hey, I just dollar cost average into Bitcoin and I safely and securely store it in my cold storage wallet. And I said, that's a great plan. But for me, I want to also, this is my big mission, also use it to generate cash flow into the future. Now, I did want to give credit where credit's due. Tanessa and Flynn gave a presentation at that live event, and they were talking about their covered call ETF portfolio strategy. And basically, it's using traditional vehicles in covered call options trading inside of an ETF. And so basically, you just buy a basket of ETFs that fund managers, operate through the covered call strategy and produce dividends to the investors. And so they were talking about producing about 11 to 10, let's say 10 to 12, 10 to 13% per year in cash flow with that strategy. And so I'm sitting in the back of the room going, wow, this is great. This is something that is consistent cash flow that you can use while you're still investing in the market. And so I thought about what's the crypto DeFi equivalent to that. Well, for them, when I was listening to them talk, a lot of their ETFs are S&P 500, NASDAQ, like huge ETFs, big funds with a big basket of assets. And so I had a conversation with them and I asked them, well, what if the price of these ETFs goes down? Like, what if the underlying stocks and equities, what if they drop in price? What do you guys do with that? And they said, well, we just buy more, right? This is our cash flow plan. We just keep accumulating more shares and more shares and more shares because those shares then produce the cash flow. And so I was thinking about this going, okay, again, what is the crypto DeFi equivalent to that? Well, that's to create a treasury of Bitcoin, meaning I want to have full exposure to my Bitcoin while also generating cash flow. And so here I'm going to take two skill sets, two activities that we use in DeFi, and that's lending and borrowing, as well as liquidity providing. And I'm combining them for a strategy, a cycle that I can use to help me accumulate more Bitcoin. And like I said, the price of Bitcoin is going to fluctuate. But in this strategy, I'm always going to be accumulating more Bitcoin. The dollar value, say this in a different way, the dollar value of my portfolio might shift up and down as the underlying asset shifts up and down in price, but I'm going to be continuously accumulating more Bitcoin, meaning I'm going to have more Bitcoin a week from today than I do right now. And then if I zoom out a month, 2 months, 3 months, 4 months, 5 months, I'm going to have more Bitcoin exposure, more Bitcoin coins than I have today. And that's been my mission, right? So that's my big mission. What's the strategy that I can put forth? Now, the first thing I'll say is I want full price appreciation of Bitcoin. Okay, so the best vehicle for me to do that is to hold spot Bitcoin. To say this in another way, if I were to take my Bitcoin and put it directly inside of a liquidity pool like Wrap Bitcoin USDC, let's say, right, on Uniswap or on Aerodrome or wherever you're going to do this strategy, if you're putting it directly inside of a liquidity pool, you are not going to experience as much growth. It's great for cash flow, but it's limited to the upside when it comes to growth. And so for me, when I'm thinking about my treasury of Bitcoin, I want to have spot holdings of Bitcoin because I want to see full price appreciation. So based on that, I like combining lending and borrowing strategies with liquidity providing because it allows me to maintain full exposure of my supplied assets, right? So to say this in a different way, if I lend my CBBTC, and if I lend my Wrap Bitcoin, I'm maintaining full exposure to those Bitcoins. So if Bitcoin goes up in price, my lent positions also go up in value. Where a liquidity pool is long as well. And so I'm going to profit if prices move up, but definitely not as much. And that's where impermanent loss comes in, right? The difference between the value of the liquidity pool versus the value of if I just held that asset, the difference of those two scenarios, that's impermanent loss. And so with liquidity pools, that's the biggest risk and downside is if price moves up, especially if I'm paired with a stable coin, if price moves up, the dollar value is going to go up in that position, but it's not going to go up as much as if I just held it. Okay, so which one should I do? Should I do lending or just spot holding, or should I do liquidity pools? And in this strategy, the answer is both. I am doing both. I'm lending CBBTC and Wrap Bitcoin on Aave, on Arbitrum, and CBBTC on Moonwell on the base chain. I'm using those as collateral to borrow stablecoins against it. Those stablecoins then I'm using to open up liquidity pools. Now, if you've been around this world for a little bit, you'll understand that now I'm leveraged long. I'm long in the spot holdings here in the lent position, and I'm long in the liquidity pool. And so for somebody that is very risk averse, just understand that if I'm long Bitcoin here and long Bitcoin here, the risk here is if Bitcoin drops in price. If the price of Bitcoin drops in value, this is going to lose in dollar value, and this is going to lose in dollar value. But the why I like this strategy is that I maintain Bitcoin exposure. I don't care. Again, I'm viewing this from several years, several decades out. I don't care about the short-term fluctuation of Bitcoin. I care about accumulating more Bitcoin. So that, again, the dollar value of my portfolio might shift up and down, but the quantity of my Bitcoin is just going to continuously climb up. Okay, so again, I'm lending Bitcoin, I'm borrowing stables against it, taking a long position in this lending position. I'm using those stables to open up a few different pools. Now I'm on Aerodrome that I'm testing. I'm on Uniswap through the base chain, and I'm on Uniswap on the Arbitrum chain. Now I'm using tools like VFAT and Revert to help me manage those positions, but that's also a little bit more risk as well. Like I have my Revert position here, and I also have my VFAT positions here. Those are going to be a little bit more on the risky side because they're third-party services. So if you want to have the least amount of risk possible, go directly to Uniswap or directly to Aerodrome. I use those two platforms because it helps me manage, and actually in Revert, I can leverage up that position. We don't need to talk about that now, but that's why I use those two different platforms. You don't have to, but that's why I do it. Okay, so again, I'm lending Bitcoin, meaning I have full exposure here, and I have these three liquidity pools that are open, and these are producing cash flow for me, meaning they're producing rewards in the form of Bitcoin, stable coins, and then in the case of Aerodrome, I'm earning Aero tokens. So all of these I can collect as rewards, and I can do two things with them. Number one is I can convert them to stable coins and take them off chain as lifestyle chips. And so for somebody that is wanting cash flow in their life, this is a way where you can extract the rewards from these liquidity pools and take it off as lifestyle chips. You can use it to pay for bills or do whatever you want with it. The second thing, which goes more to what I'm trying to accomplish here, is I want to accumulate more Bitcoin. And so what I'm going to be doing is collecting the rewards and then converting them as Bitcoin and then adding that to the supply. By doing this, I'm lowering the LTV, the loan to value ratio, and that's the health position of this lending position here. The risk with this is that if Bitcoin drops in value and the LTV, the loan to value ratio, rises above a certain threshold, I'm at risk of liquidation. And so with this strategy, by collecting rewards and adding more Bitcoin to the supply, I am driving my LTV down consistently. Now, if Bitcoin continues to move up in price, the LTV will also keep dropping down. The other part of the system too is I'm going to be injecting new capital. And so a big thing that Tanessa and Flynn were talking about during that their covered call ETF presentation was that they went through a phase, I think it was like 4 or 5 years of what they called the accumulation phase, which was consistently injecting new capital. And that's what I've been doing with Bitcoin as well, as I dollar cost average into Bitcoin every single week. I have been for the last several years. And so now I'm taking that new capital injection and I'm lending that as well. And so what these two actions will do by collecting rewards, converting to Bitcoin and supplying, as well as injecting new Bitcoin into the supply, that's going to consistently drive the LTV lower. Okay, now I'm going to zoom in a little bit because I have some criteria that I look for, which also, if I go back to this, it's also part of the, where am I here? Yep. Here we go. It's also part of the evaluation, right? Is checking on the KPIs or key performance indicators. And one of the KPIs that I look for is the LTV, the loan to value ratio. For me, my target is between 30 and 40%. If it's less than 30%, I might borrow more and use that borrowed capital to add more to my my cash flow vehicles here in my liquidity pool. If my LTV rises above 45%, I'm not going to borrow anymore. In fact, I'm going to use the capital, maybe potentially new capital injection, or the rewards I earn to either pay down the loan directly or just continue to add more to the supply. And so this is a KPI that I can look at. I'm actually having it right here. Check out this bottom one right here. I'm gonna try to highlight it. Nope, it won't let me. Here, I'll do it like this. This section right here, you can see that my LTV is 45, a little over 45%. So I am not going to be borrowing any more from this position. What I'm going to be focusing on is adding more to the supply. And so when I collect rewards from my revert position here and I inject new capital, those two are going into this arbitrum position so that it drives the LTV back down below 45%. Okay. What else can I talk about? There's a lot of things I can talk about, but this is if I were to zoom out, I'm putting together this strategy not for the next couple of weeks, not for the next couple of months, but the next couple of years and potentially decades. Now, who knows what the DeFi space is going to look like over the next several decades, but for me, it aligns with my mission, which is to create a treasury of Bitcoin that can also generate cash flow that if I wanted to take out lifestyle chips, I can do so. But for me, my focus is, again, adding more and accumulating more Bitcoin. The other thing, actually, I should mention this. So other KPIs that I look for in that evaluation step is average monthly returns, right? Average monthly APR in these liquidity pools. Now, when I was talking with Tanessa and Flynn, their target was about 12% a year. 11 to 13% is what their targets were for cash flow, APR, if you will, on their ETF strategy. And so I thought to myself, well, what if I could I do 3 times that in a very wide Bitcoin pool? And the answer is yes, you certainly can. And so my target is 36%. If I can produce over, at or above 36% APR in my Bitcoin liquidity pools, I am now producing 3 times as much cash flow as those covered call ETF strategies that they were laying out. And so for me, that was a really good target APR. And so for me, I'm looking at these and I'm tracking these on a daily and weekly basis to say, am I doing about 36% and greater? Right now, the aerodrome's actually it's underperforming just a little bit. I actually have this here in my track my liquidity. I'll bring that up really quick, actually. And I'm going to do in range positions because I want to show you my Bitcoin. Here we go. So the Arbitrum pool right here on Wrap Bitcoin USDC, that's doing about 4% per month. And then my Uniswap pool, and these are a little bit wider. These two pools are a little bit wider, but that's doing about 2.5% per month. So it's a little bit under my target, but that's because they're wider ranges, and I don't mind that. And so for me, I'm good with earning about 2 to 4% per month in my Bitcoin liquidity pools, especially because I have them at wider ranges at like 93,000 to 110,000. So for me, having that wide of a range and earning about 2 to 4% per month is something that I can just consistently use to collect and collect rewards and add that to my supply position. So I know this was a little bit longer of a video, but this was a complete system. I wanted to make sure that I shared with you everything from the design phase all the way to the evaluation and next steps phase. So again, this is a system that's going to be compounding on top of itself to help me accumulate more Bitcoin and then eventually use that to generate cash flow for lifestyle potentially. So hopefully this brought you some value. If you have any questions, don't hesitate to put it in the comments down below. And with that being said, we'll see you in the next video. Peace.